And good morning, everyone. Welcome to the London session on TopstepTV. If you're here for the first time, my name is Deeyana Angelo, aka Market Stalker D. I've been trading for about 17 years now. It's going to be coming up to 18 years. Ooh, Granny D in the house. And I've been trading futures for about 12 years out of that. I am a Series 3 registered professional, and I specialize in energies and metals mainly, occasionally dipping into equities, and also trading Dax quite a bit, which we don't have yet on TopstepTV. But I am going to spend about 5 minutes just going over what is happening in Dax as well. Now, one thing that I can see is that we have the rollover across the board. So equities have rolled, crude oil has rolled, RBOB has rolled, GC is still in February because that rolled earlier in the next front month rather than January. Right now I am looking at gold here. So let's go with some levels first. As always, I'm going to start on the daily chart, just for that overall bird's eye view picture to see exactly where we are. And right now we're back in that range that we had a while ago. So if I just widen this, you can see that we're kind of floating in that same big volume area. Now, even if this goes lower, we're probably going to be spending a little bit more time in this area, primarily because there was so much trading going on there. But generally, we do seem to have attempted to go higher. But like I said before, usually what gold tends to do is that it puts in either a high or a low for the year in December. And then that top tends to stay throughout about half of January in most cases, in most years. So that's something to consider. Let's have a look at the 4-hour chart. We're opening below value. Now, we did make a pretty nice move, and we opened within about 0.2% from the value area before further drop. And we're now reaching some of these levels, both from the options chain, but also from my average session range low, which is a little bit lower at 26.52. So ideally, here I have a couple of hypos that I might look at. Actually, I can see 3. So the first hypothesis would be that we fail the auction after testing a little bit lower from the initial balance. Let me put the full screen on because Bruno is telling me to. Thanks, Bruno. Yeah, we are sitting in an area of demand where this whole rise began. So that's one of the reasons why I'm looking for longs somewhere around here. Now, whether this happens for London or a little bit later on, that is something that nobody really knows at this point. So what gold tends to do is it does seem to move a fair amount in Asia, then London sort of slows down, and then everything picks back up. For the overlap, for the overlap, that is the time about 2 hours before COMEX officially starts trading, and usually you see this increase in volume in and around about that time, which opens up the possibility for some more committed movement in a single direction with a little bit more volume. So we always want to trade products that are moving for London. Now, you know, obviously you're going to have some outlier days when London is pretty lively, but that is not the norm. So we have to keep an eye on those volatility indexes, to make sure that we're not trading something that is falling in volatility. And right now I can't see that. Gold is kind of holding. I mean, the volatility is down about 1.6%. Ideally, I like to trade gold when the GB which is the CBO and E gold volatility, is around 20. So that's a little bit under that, and that's probably why we saw a pretty quiet day yesterday in gold. One thing that I was looking for yesterday was that we sustained the move above 2680. Now we tested above it, but we didn't sustain above it, which meant no further trades. That is something that I use to make sure that I remain in a trade or whether I bail. So even though we tested above it, it was not able to hold into any sort of a committed move away from the initial balance. And that was my exit. So I ended up like scratch day there. However, I did do a very nice RBOB trade towards the end of the day. I mean, I only did one trade and it was a short ballpark from RBOB VWAP. And I did use the crude oil as my guide to basically run a hypothesis that we're going to have more of a range-bound day situation. So I used the second standard deviation volatility band from VWAP, from overnight VWAP to find that trade location. At the time, we already had a neutral day type on crude oil. So that's all I did. I basically just used RBOB as my vehicle of choice whilst looking at all of my levels from crude oil, which is currently in a bit of a reduced range. So yesterday was only barely about 100 ticks of the entire movement, whereas RBOB moved over 300. So naturally I managed to get a much better trade based on the same idea. And that's something that I like to do with correlated products. And obviously RBOB and gold and crude oil are very correlated. They're almost twins. However, on every single day, one of them will be stronger to one side. And that's also something that I look at, the relationship between the two products. So let's do a little roll call here to see who we've got this morning. So we got Dan Trader, we've got Teo, we've got Trading Like a Bot, we've got Kevin, Anti-Up Ace, Lido changes his name every single day. That's quite a commitment. We've got Greg, we've got Krista, Leah, New Noose, Mr. Moon, Motivation Shorts, Gear, J-Sim, Sushim, Dave's Power Life, and James for now. Okay, welcome everyone. Thank you so much for joining me. Manifest says good morning. Dad Terrence. Yeah, so we have some nice group of people here. Let's start this class with the overlook of these gold options levels that I might want to keep an eye on. So one thing that's kind of jumping out at me is this put support at 26.55. Now, the way I like to use these levels is to wait until they're either reclaimed or until we go below them and I get more information out of the profile. Right now, we're just trying to dip below that initial balance range. And I also have an exhaustion level, which I take from the regular trading hours. So I use kind of a shortened London there. And I'm looking at 26.52 and that 26.55 area as a zone to tell me whether we're turning around or not. For now, we're just dipping below it, so there's nothing to do but observe. If I was to just go short here, well, we do have the ADR low at 26.38, which is much further down, but that is not expected to be reached until much later on if we indeed start to dip down and go into some kind of a sustained auction. So one of the primary things that I want to see is maybe a failed auction to the downside, so therefore longs present themselves, and maybe a test of overnight VWAP, which would be a pretty decent area to look for further shorts. Failing that, if it goes higher and does a full rotation through the initial balance, I might want to look for average session range high, which is closer to the London value low. Both of those are located within about 20 ticks from each other, so about $2, with the average session range high being around 73 and then London value being around 75. So that's the range that I'm looking at. I'm not really that happy doing sustained auctions down. until everything becomes painfully obvious that we are in a sustained auction. So we're not going to be trying to front run anything. Today there's not the day for that. A lot of other products are rolling contracts, and that always brings a little bit of weirdness into the markets, and it always gets to a situation where the volume is split between the two contracts, so things can get weird. And this is always the case around about this time of the year, because we have equities rolling. That's a big thing in equities because you have the rollover that happens quarterly, so it's not as frequent in some of our products that we trade here. RBOB is gasoline futures, Greg wants to know. So RBG is the current contract, but and as you can see, it's called RBOB gasoline. And it's because it's a special type of gasoline. I think it stands for reconstituted blend. I'll tell you in a minute because I always forget the full name. Reformulated gasoline blend stock for oxygenate blending. So in order to avoid that mouthful, we call it RBOB. R. Robert, as Hogue likes to call it. And when we first started calling it that, our lovely Robert Cooney, the coach, he always used to freak out. It's like, R. Bob? Oh, am I supposed to be on? It's like, yeah, you're right. Chill. So he used to freak him out every time we talked about RBOB. Okay. Now, if you are also following me on YouTube on my own channel, you might have seen a video that I did that I released yesterday under the name "Should You Copy Trade?" It's a kind of burning question that I keep getting from various people. Do you copy trade? Should I copy trade? Who should copy trade? So I kind of covered a whole bunch of stuff that I thought was relevant in that particular video. If you haven't seen it yet, do have a look. There's a fair amount of information in there when it comes to copy trading. But the gist of it is that copy trading should be taken with a pinch of salt, especially if you've never managed to take any payouts or you can't hold on, even if you've taken payouts, but you can't tend to hold on to your XFAs for longer than a couple of weeks. And another point that I make in the video is that time is really the big judge of any trading system, and whether you should be going into the phase of scaling your capital via copy trading. And it's a great thing. I mean, it's such a good invention. However, it's not for everyone, and it can amplify your upfront capital costs a lot before you're ready. So be very, very careful of that. Don't go buying maximum amount of available account number and expecting that that's going to all work out. So you need to be at a particular stage in your trading before you decide to go into the phase of, yes, now I'm ready. I've held on to an account for 3-4 months without drama. I'm not limping in an XFA. I'm doing well. I have full control over my emotions. Well, then it might be time to get more and start copy trading in order to scale up that initial capital that you would like to trade in your ultimate live account. Lizzie says, thanks for the info on rollover and how the market can be tricky. First time navigating that. Yeah, so the rollover can go either way. It can either lead to some crazy movement because there's this thing called the switch order, and you effectively have a whole bunch of people who are hedging something and they want to keep hold of their positions, but they don't... they're not trading continuous contracts, so they have to roll. And sometimes that brings some pretty violent moves. And we saw something like that in NASDAQ yesterday. So just for general information, let's have a look at NASDAQ. As always, daily chart is your first line of defense. So you can see there's this gap. Now, this is not a true gap. This is just a new contract trading. And this is something that happens quite frequently. Now, on NASDAQ, we are still at all-time highs, which makes things very, very tricky. And some of the things that I like to do when this sort of situation is happening is to look at the options chain, but also to look at my ADR and ASR levels in order to figure out whether there's any interest further up. And I can see they're still interested in 22,400, 22,500. And then we have sort of a projected range based on the volatility and average ranges all the way up at 22,638, at which point I would expect at least a slowdown of some sort, at least a slowdown. So is this thing going to suddenly turn around and smash back all the way down? Well, I don't think so. I don't see that happening. We also have the FOMC rate decision tomorrow. So while we might have some reduced interest before the rate decision is over and done with, we could still see some longs, which is absolutely insane. But hey, it's NQ. It does insane things, right? So I wouldn't necessarily fight this unless you're like a hyper scalper or something and you want to snipe it for a few ticks and you're very good at that. But I personally look for larger moves. So, I'm somebody who likes to be pretty selective with the types of trades that I take, and I will wait and wait and wait. And then if I see a really good opportunity, usually for some sort of a mean reversion trade, I will take it. However, that doesn't mean that I will be looking for shorts in equities. Sometimes a mean reversion can mean that you wait for a decent pullback and then you look for a move in the same direction. So you're not necessarily always a contrarian in that respect, because you keep in mind the larger picture, the all-time highs. And sure, look, there are some people, there's like Nick for a tick, he's very good at looking for very short-term pullbacks, but he looks for very specific things. He looks for absorption of the orders, he looks for icebergs, and then he effectively just snipes his 20-30 ticks and then he's done, right? Or 20-30 points. I'm personally not that type of a trader, because if I try and do that, I want more out of it, especially if I recognize that the opportunity is offering me more and I want to be in on most of the moves. So, very, very different styles. So it just depends on what you're good at. And I know that many people are like, oh, I want to be a scalper. Well, that's great, but were you successful at scalping so far? And if the answer to that is no, and you keep doing 50 trades a day, that is not the way the top scalpers do things. If you, if you see any scalper that we have on TopstepTV, you have Robert Cooney, you have Rips, you have Nick for a tick. They don't do 1 million trades per day. They don't. They do 1 to 3 trades per day, and then they're done. And that's what makes them excellent in what they're doing, right? Now, if I attempted to do scalping, I would try to sit here for 8 hours, like exactly what some of you have tried to do. Sitting for 8 hours looking for tiny little opportunities, then missing out on the bigger chunk of the picture and still wanting to be involved in the market. And I think that is what leads to overtrading. For most people, the desire to be in the trades all the time. So if you can't, keep your keep your hands in your pants, if you can't keep your mouse, your finger off the mouse, then maybe you should reconsider the whole scalping thing and work on developing the skills to look for bigger opportunities. And you're not going to find them just by staring at, whatever's going on a 100-tick chart and then trying to snipe things here and there. Because for the most part, if you're not at the level that is significant enough to statistically bring you that big home run trade, you're just going to get chopped up, right? Because that's not how you fish for mean reversions. And a lot of the time, if I am looking for a bigger move, I will wait until I have a committed movement away from the low that then breaks the structure to the opposite side, and then I will go in. I might try and front run a trade if it's like a really good level that I have a lot of experience with, and looking at a particular time of day when, again, I have statistics to back up what happens most times at that time of day. I'm not going to be trying to be front running a trade and, trying to snipe it from the low or the pure high. So all-time highs are not for selling. We need some sort of a structure break, and ideally you need that to happen at least on a 15-minute chart. So please be careful if you're trying to willy-nilly short equities. This is not the time for that. Wait for that structure, wait for more information, and if there's nothing of the sort, look for a pullback and go with the trend. That's always the best way. Leah says, so how would you calculate with ADR? We're at all-time highs. What should one be aiming for? Is there an average? Of course, there's an average. So whenever I'm calculating my all-time highs and ADR based on anything, it doesn't matter where you are. It's irrespective of whether we're at all-time high or not. What I do is I use the average. So I know that ATR people use for stop loss sizes, people use for a whole bunch of stuff, but I have my own calculation that I use as levels. It's a little bit different from what you might have seen, but this is something that it's probably the oldest approach that I've used. So that I've been using for 17 years, almost 18. Where you effectively take n number of previous days. So let's say, just for an example, you take 14 days and you see how much movement there was for, let's say, regular trading hours. Like how much did NQ move on average over the last 14 days for that particular time frame. And that becomes my ASR, average session range. That is calculable, right? We can extrapolate the expected movement for the day, and once that's reached, you can actually extrapolate some other data from it. Do you have an outlier day, or do you have a day where you expect things to slow down or to shoot through it? Now, if we just keep shooting through it, that's an outlier day. So something odd is happening, and you can also use it almost as a line in the sand. If it gets broken and you have a committed move above it, upon a retest of that same, let's say, ADR high was smashed through, and then you retest it at some point, that could be used as yet another level on the back test, right? So you go up through a ASR high, you come back, hits the ASR high from the above, see if they basically take it back up. So that's one way of using it. But the primary use is for the normal days when the market exhausts everything. You get up to that level, you expect a slowdown, and then an ultimate reversal. Now, NQ being NQ, it is going to sometimes overshoot it by about 20 or 30 points. But some of the other products that we trade, like, for example, RBOB and GC, and, CL, even platinum is pretty good at just, like, stopping at its exhaustion points. So we expect a reversal of some sort, and this is why I have this reputation in the industry as, oh, you're very good at catching tops and bottoms. It's like, well, no, I'm very good at reading the exhaustion points. It has nothing to do with me having a crystal ball over there. It's just going, I think it's going short. It's literally just a matter of waiting for the right area, looking for clues, and then using that situational awareness to figure out if there's a bigger move there, and if we have truly exhausted the range, and now it's time for a decent pullback. So that's all that is, and every level that I talk about has a very similar approach when it comes to actual setups and how do you actually enter into a trade. So just keep all of that in mind. Now let's have a look at the average ranges in NQ. Just gonna change the contract over here. So we are in March. So that's NQH. And let's see exactly where that's going to fall. Sometimes I like to use 40 days to smooth out things, but for now, let me just have a look. Just quickly, so the blue lines are the average session range, which is at 22,429 ballpark. Average session range low, so this is just London based, 22,291. And then when it comes to the overall 24 hours, which could come in during the main trading session, is all the way up at 22,550. And then to the downside, we have 22,200 evens, which also matches the London value high. So there might be interest there if we get all the way down there. So that is how that's calculated. Now, if I smooth it out a little bit, those may change for a little bit, but for the most part, they are very, very similar, and it's all a zone, right? So let's remember that everything is a zone. So now if I try and match that up with some of the option stuff that we have, I can see that we actually have some levels even higher up. So we have something around 22,600. So I wouldn't be surprised if I see NASDAQ up at 22,600 today. And then to the downside, we have a minor GEX level around 22,200. However, we still have the projected volatility around about the same area, even from the options chain. So yeah, those two would be like my big turning points where I might want to look for more sort of home run trades. Anything else that I look for might be related to the initial balance ranges and to see whether we're failing the auction, succeeding the auction. Obviously, overnight VWAP is a very, very good level for all equity indices. They tend to be very, very reactive, so that should be on your chart too. I do flip between overnight VWAP in the early session, and then I also like to have a look at the session-related VWAP once we have a bit more data. So that's your class for the day. All right, so let's have a look at that GC again. Just flipping through different time frames because we failed the auction. Well, no, we haven't officially failed the auction, but if we manage to hold above 26.54.7, then there's a possibility of a failed auction. But if that doesn't happen, fingers off the mouse, and we wait, because the levels down here on gold, they're just not good areas for further shorts. I don't like trading in a very highly dense volume area for former demand. It just means that even if it works out, there's going to be a lot of pain that this market might give you. Okay, so it's doing one of the annoying things where it's closing right on the nose of initial balance low. So if I put the initial balance low here as a white line, that's the initial balance low, right? And it just closed just below it. Just don't annoy everybody to no end. And that means I have to wait for more information. So it means we need to wait for the next at least 15-minute bar to start spending time inside the initial balance. That's another thing I look for. How much time are we spending outside of it or inside of it? And whether there's like a committed move in the same direction, whether we're reversing. Just the overall pulse of how the price is doing. That's called situational awareness. So that is something that is very good to develop as a trader. So rather than just sitting here clicking buttons, you need to start having, that's what they mean when, people say, oh, I have a feel for the market. That's what it is. And for some people, it came from a discretionary side where they maybe weren't using everything that is available to us from the data perspective these days. However, they still developed a very good feel for what should happen at that time of day around a certain area, how that market behaves. But remember that without experience, there is no gut feel. It's just an impulse. Okay, so many novice traders that I see try to trade on a feel. It's like, what are you feeling for? you know? Like, what is that based on? Well, I think it's going to go, and then it doesn't go, and then it's like, oh, I don't know what's happening. Well, until you get to a point where you're not confused by what is going on the chart, you need to try to keep learning. And in fact, this is a never-ending journey of self-discovery, right? So it's one of those skills that takes a long time to develop, and as you're learning more about the markets, you learn more about yourself. And most of us actually end up curbing some of our impulsive behaviors in other areas of our life. I know that I used to be a little bit gung-ho when I was young, but that certainly changed. Like trading has taught me a lot of patience. It's taught me to not react to a challenging situation in an explosive manner. So now, even if something challenging occurs in my life, like just to give you a quick example, there was like one time when I was at the gym and the car park, for some reason the machine wasn't working, so I went into the office to pay for it. And the guy didn't know how to use the machine. So as I was typing in my PIN codes, that actually printed the bill. So he didn't know how to set it up, and I wasn't thinking. He was like, your PIN, please. So I just typed in my PIN, and he ended up taking like £440 from my account. So instead of it being like £4 or something, like £4. So instead of getting super annoyed, so I went, what's that? And he goes, oh my God, I'm so sorry. And he thought that I was going to explode at him and that I'm going to be super angry. I just went, oh, okay. All right, that's fine. And he's like, I'm just a god. I don't really do this very often, so I'm so sorry. And I just went, no, don't worry about it. It's fine. I mean, I get it. Mistakes happen. And it was all sorted out. I, got the refund and everything probably about 7 days later. So it wasn't instant. It was a bit annoying. But then after I didn't get annoyed, he was so impressed that I just didn't blow up at him for effectively charging me £400 for a couple of hours of parking space. And he was like, wow, thank you so much. Like, it's so nice. And if you had put me in that same situation, probably about even 15 years ago, I would have been fuming, right? I would be like, you useless, what the hell, one job. I would have been a very, very different person. So I like to think that it's the trading that's brought me all of this like extra awareness and the ability, emotional resilience to deal with challenging situations in a proactive rather than reactive manner. Let's have a look at more questions. So Michael S. says, hi Dee, do you use edge full? And if so, what are the probabilities of the roll gap fill? Okay, so roll gap fill is not, it's just a different in pricing. Okay, so it's not that we have a true gap. It's just that is the starting price today of that new contract after everybody's rolled. So it's not a true gap. Therefore, there's no real probabilities there. The gaps from those sorts of price activities are not fillable, right? They don't really mean much. The gaps are usually filled when there is an event that actually caused the gap to happen. Like, let's say we had some good news from the Middle East. Therefore, overnight, that happened. They jumped. And now you're looking at potentially those guys who were long to create the gap, which is usually interbank activities. Now the guys that are coming in to work and they have to, start their day, usually, it's the hedgers and market makers, and they're going, oh, wow, this is a bit too high. Let's get it back down because we can't really make money here. It's perceived as too expensive. That's how the gaps are filled, right? And same thing can happen on the other side if you have a gap down. All right, so we're starting to spend a little bit more time here in this area. Let me just go down to a very low time frame now to look for that structure break to the upside. We have this area here at 26.56.1 on gold. So I kind of want to see that really go. And then two things, not just to get broken, but also to get sustained above it into a meaningful time frame, which in this case would be at least a 15-minute chart. If we don't get that, there is no failed auction long setup, but I am going to be actively watching it. Let's take a slurp of caffeine. So 3 things really: time spent back inside the initial balance, and actually let's do a line through. And it's struggling. There is now a little bit of boom, boom, boom battle for this area. This is initial balance low, this ugly white line. So we want to see price spending time above the initial balance low. Ultimately, we want to see a break of 26.56, and we want to see a sustained move above that. If at any one point something breaks in that kind of 3 condition system, that will be my exit. Because of the timing of this stream, we may not get the full sort of failed auction, but I'll be happy with like X2 here, just to get something out of it. But for now, we're still trying to decide. We still only have one condition. We have price spending a bit more time inside the initial balance. So let's see if we can maybe get some movement above 56. I'm just gonna do like a micro here. Again, I don't want to be trading products that are not going to be moving with any sort of serious size. So let's just try stop market buy. Whoops, no, that's the full one. So I need this one. We're going to do a stop buy on 26.56.6, just 1 micro, and then if that gives us a committed move, then we can monitor it for sustained movement higher. All right, let's continue on with the questions. So because of that, the way the gaps are made, this is not a true gap on NQ. So I wouldn't expect Edgeful to have roll gap things, because it's not really a true gap. It's just a difference in pricing between the old contract and the new contract. And then you also have this whole thing called the basis, which is a difference between prices of spot versus prices of futures. And even though we had a troll here the other day who argued that spot and futures are the same and that I'm useless, believe it or not, there are whole hedging strategies that take advantage of the basis, which is the difference between futures and spot prices. So they're definitely not the same products. And whilst they might be similar and they track each other, there are differences in prices. There are times when the spot prices are at a premium, and that's called backwardation. And there are whole arbitrage strategies in hedging to take advantage of this weird flip of spot versus futures, okay? But yeah, so gap upon a roll, not a true gap. Federico says, how do you insert mentor Q levels on Topstep? You don't. So Topstep is a white label trading view platform which doesn't connect. Like, they give you trading view charts, but they don't connect into the trading view ecosystem. Okay, they take the template and then you can do whatever you want with it on the back end. You can create your own indicators, but you're not going to have the premium indicators from Trading View. Okay, so there's no way to insert third-party indicators. What I've always done, I've always set different charting packages, and I've been trading for long enough to be one of those traders that when you were given your first funded account, charting packages did not necessarily come with it. So, for example, we had one of the first firms that I worked at, they were using CQG. And CQG didn't come with a charting package. So the live account that they gave us was literally just a dome. And if you wanted a charting package alongside with it, you had to pay extra for it. And it wasn't cheap at all. So I back in the day, I always used to use another platform for that I was already paying for. And that kind of continued. So I have an execution platform, which for me is Topstep for this purpose. I also use Ninja. So I do have some of the indicators of Ninja. We're actually creating Ninja indicators, trying to translate them from the AMP Futures MetaTrader 5, which has been a platform that a lot of people used to use, especially MT4 back in the day when we first started creating our Bloodtick indicators. And now we want to bring that into Ninja because Ninja has finally updated their C# to some more normal versions, and it is time. However, TradingView is not really on our radar, but primarily because of some of the limitations that TradingView coding language has. So what I would say, if you have a service that offers levels on a different platform, just use that platform. For MentorQ, I use the TradingView on the other screen. And for example, you will see, just to show you quickly, not to spend too much time on it, but this is where all of my MentorQ levels are, right? I also have something like Delta and other things that I want to have while I'm doing the stream, just to kind of help me make a better decision and to not jam everything into a single platform. I find it extremely annoying when I start having performance issues because I've jammed like a million indicators that I want to see. And some of this stuff that takes in data, all of the calculations that has to be done on the back end, it can get very expensive on the actual processing power or whatever, or even memory as well. It's like CPU gets a bit heated up, then you start running out of memory. Like Bookmap is actually guilty of that a lot. It's like if I have 6 or 7 things open that I'm tracking on Bookmap, it can actually choke up my machine. So I have to be very careful when I am running the streams, what I'm doing and how many things I have opened. And actually my computer is probably due for an upgrade. It's been a while. However, right now I don't want to be doing that because we have this whole house thing that we're trying to move to the countryside, basically. So I'm probably going to be sorting that out once I'm settled. So I would say just use MentorQ and TradingView. I think it's probably the simplest way. I know that some people are using it on Ninja, but one thing that I can't find there is how to convert the levels. So I don't think you can convert levels from one thing to the next, and I do that a lot, like a lot. So I need to have that functionality. So for me, I use my Bloodtick indicators on AMP. I use my MentorQ on TradingView, and then I have Topstep for my ribbons, and it just keeps everything nice, clean, and separate, whilst still providing me all the data that I like to see before I get involved in a trade. I'm just somebody who can take in a lot of information, and you're looking at 18 years nearly of just adding bits and pieces that I found useful and that I want to see to get that situational awareness and to figure out what is the best choice for the current market state, right? All right, let's have a look at more questions. What is the level again you were looking at on NQ? So the level on NQ, I'm looking at 2 of them. Not MQD, wakey. One of them was up at 22,600, but I do have a level in between at 22,550, which is the exhaustion of the entire range. And then to the downside, I was looking at 22,200. But remember, it's a zone, especially with NQ, it's going to be like a 50-point zone at the very least, maybe even a 35-point zone. So whenever you have, like, let's say I say 22,600, I mean, that could easily go to 22,650 or 22,690 and then reverse. So just be mindful of the NQ, overshooting levels and not particularly respecting anything because it's a thin market, right? So there's a lot of up and downs. And you know, this whole thing about wanting to stay on SIM forever, this is also a problem, right? So one of the reasons why CME might not be happy about the forever SIM accounts is because we have tens of thousands of people who are trading on SIM. And if all of them would be trading in the live, or a big majority of them would be in the live, you guys would actually contribute to the stability of the markets. So maybe we'll have NQ that actually respects levels. Like, have you actually thought about that? I find that people are extremely selfish and they're looking at everything from their own sort of money hoarding mentality. And I hate that, right? Because you can't see further than your own nose. You know, it's like, why don't we just step outside and see what might be good for the industry, not just you. So that kind of selfishness that I've seen on Twitter, I'm just like, ugh, like just really appalled and yet again disappointed in the human race. But yeah, it's you know, it would be very nice if all of these little locals that are on SIM would suddenly be in the live and we actually start having more. Okay, gold is making a move. You know, if we can get more than about, 20 contracts per price on NQ. Okay, let me just move this to, it's going to be a bigger stop here, but it's just a micro, so it's okay. All right, so what do we need to see now? We need to see a sustained move. So at this point, 100 ticks is not going to do that much for me very soon. But we will need to see a sustained move. DMI has jumped, so that's quite obvious. Let's move into the 500 tick chart now. So what we want is a sustained move above the ribbon on a slightly higher time frame. And remember, this is more of a disaster stop at this point. And you see, I'm not breaking structure here. So I'm still using a disaster stop below the entire range. And we have a lot of range. We have 182 ticks average for the shortened London session. And then we have 245 ticks for the COMEX session. So that's a lot. But yeah, let's see if we can sustain above 26.56. And if we can't, it's going to be a small loss. It's fine. I am going to also monitor the actual time-based stuff. If we get a committed move, I want to see what happens at 2660 because that's KEX2 level. 10-minute chart is ending pretty strong as a Mariposa candle, but we do have a little supply there that could pose a little bit of a problem. This is a 15-minute chart now. And we have whole 10 minutes before that ends. So that's too big. Let's have a look at the 5 minutes. And let's see if they can sustain it above this broken area of 26.56.1. And again, you're not always going to be right. This is now good potential for failed auction long. But at this time of the day, sometimes that's a bit tricky. Very small trade just to illustrate what is happening here and to make sure that we do see how some of these setups can play out in real time. But again, would prefer to do this on DAX, but we don't have DAX. Where is DAX? Where is DAX? DAX is actually trying to accept London value. But hold on. Did that roll? Because yesterday that didn't roll. Let me just check something for a second. Testing that 26 area of balance. And actually, let's go down to 100 ticks so we can see what is happening. So basically what I don't want to see now, I do not want to see a return here. So we really need to sustain. Like, you can test it, right? But I need to see some committed movement away from that. Why? Because that was a previous established range that we were having trouble with, and now we've broken through it. So if we come back to it, and if we start to spend time inside that range, this is going to be an invalidation for the failed auction. And there will be nothing else to do. But as long as we're holding above it, we're holding above this little ribbon, this is still a valid trade. So there's not much to do for now. Did we roll? Let's have a look. No, we didn't roll. So interestingly, Dax is still in the still in December. Let me have a look at full Dax actually. Okay, so full Dax has started the roll. It started the roll, whereas the mini Dax is not doing it. So full Dax is rolling, but it's still not big enough to move into March because the December is still bigger. So I'm guessing they're probably going to be slow to the party. Yeah, so what I'm going to do with Dax, I want to wait for much later in the day just so that I can get as much information as possible. Yesterday I did a pretty good trade on Dax later in the day. So I tried a small long, and then towards the end of the day I did a full Dax long from the range that was established earlier. And I actually managed to get, I think it was 50 ticks. Very late. It was actually during New York. I don't necessarily always trade Dax during New York session, but that was one of the trades. And it took forever to actually establish a range. It's like, come on. And that's just the effect of rollover, right? Yeah, so it looks like Dax is just still ambling around in the rollover, which is not great. Copper long. Yeah, I see that it's a no for me on copper long because we are breaking some interesting levels where I expected to see a reversal, so copper is a no. I wanted to see it hold 415, so that didn't happen, which now means we have a lot of space to the downside for this thing to fall. Can have a look at copper for a second, which is HGH, human growth hormone. Just always makes me laugh. Let's have a look at the daily chart. So that's always what we want. So if we maybe get to the middle of this range, like 410 maybe, which used to be a better area. So 410 was pretty reactive in copper. I don't really see much that I can do here with it. I was expecting 415 to be reactive. It wasn't. We went straight through it. And this is technically now opening the possibility for a sustained auction down at some point today. Copper is not really as double-sided, like you don't really get opportunities to both sides in a single day very often. Sometimes you do, but for the most part, once copper decides to go on a run, it just stays in that mode of like trending mode. So yeah, I was looking for longs here. I don't have a setup for shorts in this area. I don't think it's a good area for shorts. Therefore, copper is not really something I want to trade today. And that's not to say that you might not have a setup. I don't have a setup, but you might. You know, again, risk disclaimer. This is for educational purposes only. Just because I'm not trading something doesn't mean that you won't find an opportunity. We're not the same people. You know, I'm sharing my experience of what I can see here. I don't see a setup, but somebody else might come in and say, actually, this is exactly what I was waiting for, But to me, I like to snipe it from, after a pullback, and then we go short. So if that happens, yeah, I'd be more than happy to maybe pick it up, for maybe overnight VWAP or something, which is up at 417. So we're nowhere near it. But just randomly, jumping into breakout trades. I'm not a breakout trader. I'm if I was going to put a sort of a label on what sort of trader I am, I'm mainly a mean reversion trader. I'm a big contrarian, always have been. But this is how I do my setups, like this gold thing, right? So I'm not sniping it from the low, expecting the failed auction to happen. I'm waiting for a structure break to the opposite side and then just sitting on it. And I can sit on trades if it's moving slower, as long as my levels are still being respected and as long as it's sort of doing what it's supposed to be doing, especially on the 15 and 30-minute charts, after I've obtained my entry, I can sit, and wait for the move for a long time. Is it the best thing to do? No, because if I'm going to sit in a move for 3 hours, I do want to get, a lot of ticks out of it. But for these sort of setups, for London, if we don't get any sort of a committed movement, I do have a cutoff point at around, probably in about a couple of hours, right? But I would probably cut it way before that if we don't get some sort of a upside movement. I expect to see the reversal happening in the next half hour. Sometimes they start in half hour. That's kind of the time of day when the pre-market starts happening. So, the USA starts waking up. They start putting some trades on, taking some trades off. And that tends to bring a reversal in the vast majority of products. It's not just gold, but in a lot of them, you can see this reversal around that time of day. And usually with a much bigger range because suddenly there's more volume, everybody's trading, things start to change. And if it doesn't happen by then, that'll be my sign to kill this, lock myself out until until 9 a.m. Central is gone through, and then look for my next setup into the Euro close. And that if I have nothing there, I will go and walk the dogs, and then after that, I might come back to see whether there's any setups in RBOB and CL into their settlement, which happens around, from about 1 p.m. up to 1:30 p.m. Central. So I work in chunks throughout the day. What do I think of crude oil? Right now, nothing. I have no thoughts on crude oil. It's too early for crude oil. My edge on crude oil is not in London. So I want to be perfectly straight with people. My edge on crude oil is into the Euro close, and failing that, like I just said, into its own settlement. Those are the two setups, 2 times of day that I absolutely have to have in order to try running my hypotheses. Edward says, I noticed Dax yesterday was not correlated to US indices, but then at 4:30 on Euro close, that's when it closes around about these parts of the world, it lost its non-correlation and went with the upward US trend. Do you trade DAX after it closes RTH? Sometimes. So yesterday I traded that. So you see, you explained there's a setup that I was in on. So basically I was expecting it to reverse, maybe go a little bit lower than the low that we already established for London, and it did that. So as soon as it happened, I started seeing the reversal. And then it just crawled up there over the next, I think it took like a good hour and a half to give me the profit that I was looking for. There is a correlation change. So even if they're completely decoupled, the later in the day that it gets, and the less Europeans and UK and Germans that are trading DAX, the less of them, the more correlation starts to come in with the US markets. Because think about it, if you have a set of players that are looking for a particular move in DAX and they're actively trading, and then you get the Euro close. well, what's going to happen with the equity index that still trades, but now the only people who are possibly trading it are the other guys across the pond? Yeah. So you're going to get that correlation with the US equities more, purely because the players that were driving the previous moves are now no longer there. They went to the pub or strip club or somewhere, you know. They went to have a beer, and they're no longer there. So naturally, the correlation starts to get slaved to whatever the US is doing. Sometimes it correlates pretty well. Obviously, now we have the rollover, so we have this whole mess of, NQ doing its own thing, YM doing its own thing, and everybody seems to be decoupled. So in the grand scheme of things, this is the time of the year when things get very messy for equities, especially if you're basing your correlations on the fact that, DAX will correlate with the US a lot of the times. But yeah, the later on in the day, you're absolutely right. That's a great observation. They do tend to go more with the US equities the later it gets in the day, especially after the Euro close, when everybody's effed off to do their own thing, to live their lives and go to their families. Let's see. Can I look at the silver? I can, but I don't really like trading silver on these accounts. Even micro silver, I think, is way too big for the majority of the combines and the drawdown that we have. I have some very old levels here from like a million years ago. To save on time, I'm going to look at the silver on my other thing, but I'm not going to be dragging it over. Silver is still in March by the looks of it. There it is. Okay, silver. Daily chart. Okay, this gold is starting to drag now. It's still above my level, but it's not moving. I'm going to change to a 500 tick chart just so that we can slow things down a bit. Silver at the bottom of the range on the daily chart. I mean, it's doing the similar thing that gold is trying to do. So in fact, gold to me looks a little bit better than silver for this play. They are very correlated, but silver looks weaker to me. Silver looks like, yes, it's failed the auction, but it's not doing very well. So I would still be choosing gold as a setup. So if I show you the 30-minute chart in both of these, you will see what I mean. So let's have a look. There we go. So gold has effectively almost a bullish engulfing. It's weak, right? It's more of a consolidation. I wouldn't call this an engulfing because we're not really engulfing the entire length of the previous candle. So it's a bit of a weaker signal. But then at the same time, look at silver also failing its auction. And then promptly having a selling wick here and returning to the bottom of the range. So no, this to me would be a failed auction. So they attempted it, nobody's interested, and now I would just be expecting this to either amble around and not do much. Maybe gold is going to pull it. They're pretty correlated on some days. But yeah, so far I'm not, that's ew. For a failed auction, that's not what you want to see. You want to see reversal, and in the next 30 minutes, a big push. So you want to be in on that second push. If it starts to just not do that, and this next candle ends as a doji, I might entertain it, but purely because I spent a bit of time trying to look for a failed auction. However, I'm already going to be, if I'm in with multiple contracts, I will already be, cutting it, going, ugh, yuck. And then, finally just closing it if it doesn't move. Basically, the failed auction should become obvious in the first 30 minutes after it fails. So the failure of the auction here was the previous candle. And as soon as that doesn't give you traction, it's either a fake out or it's basically the hallmark of an impending ranging day, because that's what they look like. If it's a ranging day, they can look like failed auctions that are slow, but failed auction as a setup is not slow. Okay, failed auction has a lot of volume behind it, and once it fails, there's a quick follow through. And quick follow through being defined as in the next 30 minutes, you traverse. I mean, at the very least, a third of the initial balance. If you have a bigger initial balance, then, you can maybe make some adjustments there. But if it's a small initial balance, you want to see the market just go through like most of it in that next period. And if it doesn't, you immediately have to doubt whether this is a failed auction or whether we're just, losing steam and setting up for a range, or doing a fake out, not finding business back inside the initial balance, and they're just quickly running through it. So right now, I would expect in another half an hour, if we're going to get a failed auction on gold, I want to see this move higher. So we need to see committed move, I need to be sustained. It needs to sustain above the previous high. So we managed to get a move above 26.56, which got us into this, but we now need to sustain above 26.58, which is a new high. And why do I say it's a new high? Because look at where it's now creating the whole problem. So this was the previous high. We broke the range down here, got up there to the first area of resistance. We tried to break it, but now we're having trouble holding above it. So all of those are little clues that you get to learn how to read. And you can even, I can see that on a 30-minute chart as well. I don't necessarily need to stare at anything. I can see that the previous high on a 30-minute chart was up here. So that was the previous high. That's where we stopped. And then we started to go all the way down, reversed, blah, 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 and then got us into a trade. And now we're stopping here again. So it's like, okay, there's some sellers here. We really need to get rid of them. Like if this is going to go, these guys need to disappear. And as long as they're there, it's going to mean that we don't have enough space. There's still interest in selling gold at those levels. And that's why level broken versus level broken and sustained are two very, very different conditions when I'm looking at the price action. So right now we have level broken to the upside, but we don't have level sustained. So right now this is still on the fence. This is not safe. I'm not like, I'm a trader, can leave it. No, I can't actually leave it until I see what's going to happen here. So I still have to sit here for the next half an hour to decide whether this trade is valid or whether I'm going to kill it early. And yes, I have a stop, but if I deem that this is not really a true failed auction, I'm not going to sit here and wait for this to go all the way down to my 45 tick stop loss, 46. I will cut it early, save some money, right? So instead of getting -1R, I might get minus 0.3, which saves money. Downside risk management is what it's all about. Control loss. If you don't have control loss, you're not a trader. You're just clicking buttons. What is an A+ setup that I like to trade? I see my sister is in here. Hello, Sandy. What's up? Leah says, I just got funded. Excellent. Congratulations, Leah. We always love to see that. She says, M&Q gave me the push up. After IB high was broken, I entered after the pullback from 22,380 to 22,400. So happy. Well done. Now take it slow in your XFA until you get used to it, to the pressures. I trade the minimum size and just take it slow. Remember, maintaining and holding on to the account is your first goal. It's not to make profits and get a payout. A lot of people make that mistake. The first step, keep the account. Everything else will come later. So just get used to it, get yourself wrapped around the whole pressure thing and everything, and relax. Trade less than you normally would, because what happens when you get this burst of dopamine after reaching a goal, you get a burst of dopamine that causes increase in production and motivation. And for traders, that means you want to trade more. You have an irresistible urge to keep trading and to trade the new account. Try to fight that urge. Try to step away from it until everything is calm. Sometimes it takes a month, right? It takes a month. But think of it this way. If you survive for a month, you are doing better than about 90% of people who get into the XFA. So time is the only judge. Okay? Take it slow. But well done. It's very good to see. Dan K says, what will be my target for the trade? If this makes a move, overnight VWAP, but my first loose target is 2660, where we have some GEX levels. So 2660 target 1, 2665.8 right now, which is overnight VWAP, is my final target. I wouldn't look for more at this point. Sunil says, silver has head and shoulders on the daily. I don't use chart patterns. I know that some people do. I find them not that useful for what I'm doing. Like maybe if I was not adept at reading order flow and stuff, maybe I would do that. But I don't know. I just found the whole chart patterns kind of like king stains. Everybody sees what they want to see, and I always joke. It's like, oh, I see a head and shoulders, and I was like, yeah. Do you also see a dragon that's crapping under a tree? Do you see that? Like, where does it end? And I don't know. I find it very discretionary. That's like, wait, I'm a very scientific person. So whenever I can't quantify something, like how would you even quantify head and shoulders for a machine? And surely if that was that lucrative and you could quantify it, there would be an algorithm for that. But it's so like, what quantifies the shoulder? Because some people are like, oh, this is the shoulder, and this is the lower shoulder, this is the head. And I was like, yeah, that looks like something different to me. Market giving you the finger, maybe? Is that what that is? I don't know. So I just, I make a lot of jokes around the head and shoulders pattern, because to me it looks like something else. Maybe it's my dirty mind, I don't know. But yeah, usually I just think that it's the market flipping us off. Then if it's NQ or something, it just shoots up higher regardless of what you may have seen on it. But yeah, to me they're more like ink stains, and I never really managed to find it useful. So I stick to the horizontal actual price action levels that I can quantify very easily through any sort of machine code. I can explain the amount of movement that I want to see. I can have a defined risk based on the highs and the lows that the structure has. And to me, to my analytical brain, it's a better way of doing things than saying there's some kind of a figurine hiding for you in the markets. Yeah, I know, Douglas. Yeah, more or less triple top. The more or less part is what I have a problem with, right? More or less. Well, either it's a triple top that has a tight range, or it isn't. So where does it end? How much distance do you want to have between those triple tops? It's a topping pattern for sure, but how many times have we seen NQ do a topping pattern and then just smash everybody across the face because everyone's looking for the shorts, and NQ goes, haha, gotcha. So I don't know. To me, looking at the basic structures is a lot more fruitful, I guess, just looking at highs, lows. Did we break the low? Did we break the high? Do we have a new supply forming? How big is the move away from that supply? Are we testing it? Are we retesting it? I don't know. It's just, different strokes, different folks, and all of that. Whoa, I've gone way over time. Okay, guys. While we're sitting here chatting, I didn't realize. Sorry, Bruno. Sorry, apologies. I really need some kind of a thing. All right, I'm gonna kill this for early because it's not doing the failed auction. Like I said, as soon as it fell back into this range, I don't want to see it. This is no longer what I was looking for. So we had the same thing of trying to break a structure, not sustaining, at least not for this time of day. It's not to say that it might not happen at some point today, but this is just like not what I want to see. And this is no longer a failed auction now. This might be a range bound trade, and we still could have a range trade, but in that case, that is not the entry you want. So if I'm going to shoot for a range bound trade, I want to see a shakeout below this stop. So assuming that, we're going to creep back up to overnight VWAP at some point, the failed auction setup has one entry. The neutral day type has another entry, which is sniping it from the stop run. So what you want to see on Ninja, there's this like equi-volume candle. So you want to see a shakeout of the volume to the downside. And then you want to see a reversal back into that range with an equal amount of volume. So I usually use like 1 or 2 minute candles for this. And they're fat little candles. So once that happens, that's my entry into a range bound setup. And then I usually like to run the full mean reversion in that case, which is again a slightly different objective, and usually this VWAP falls all the way down. However, I do use a session VWAP for that purpose as well. So wherever the session VWAP ends up being, which I'm going to tell you now because we have enough data to figure that one out. When it's too early, session VWAP does nothing. Yeah, and then the range bound trade for me would have a new target of 26.58. So basically just around the top here. So it's literally a trade from if we can get it, and if we don't get more sellers stepping in. So literally looking for a break of the lows, aiming to get your entry once we return to the other side, and then just literally sniping it up to 26.58 where the session VWAP lies. That is the biggest trade that you can find for this sort of a thing. But yeah, this is no longer a failed auction. It looked like one. Now we have more market generated information, more MGI, and the setups change. And by the same token, if you miss the short here, the long snipe from the lows, what you can now do is use the session VWAP from the top as potential pullback for further shorts. So now I have a new hypo that I can run later on in the day, right? So this is all like MGI, market generated information. This is not obvious before you have a lot of data that develops in the day. And it just gives you new levels as the day goes through. We also have some put support around about this level where we try to break. So I would be looking for maybe further shorts today on a pullback and then through that level. So to effectively act as sort of a bounce point for more shorts to come into the market. But we'll see, right now, this is not shaping up to be the best volatility day on gold. It's still, in that same range, like we've spent really since second part of the B period, we've been in the same area. In this area. So that doesn't bode well for a good day. But we'll see. Maybe COMEX brings us something else. However, London, as per usual for gold, is not that great for any momentum trading. You kind of think you're getting one, and then once in a blue moon you might. And that's the thing that annoys me about trading gold for this time of the day. All right, so I'm going to go and try to find some trades in Dax today. So I'm going to go focus my attention there. Thank you so much for being here with me. Hopefully you've derived some useful information on this stream. Desmond says, hello, Dee, for the first time. I see the connection between the failed downside auction, IB, as well as sustaining the move. Yeah, thanks for this. If you were trading the Asian session, what time is the IB set? Yeah, so that's a matter of what you're trading. I prefer to use my IB for Asia when all three exchanges are running. So when we have Sydney, Tokyo, and Singapore, which would put me on to 1:30 a.m. my time, so that's GMT. But some people like to use Tokyo, which is GMT midnight. Now, if you're going to do that, just know that there's a lot of increase in volume when the Singapore exchange also opens. So that sort of brings in a lot of, sorry, not Singapore, Shanghai. Jesus Christ. Mornings. Shanghai exchange, because that's a big exchange with a lot of volume. So sometimes you can find pretty good setups on that increase of volume, kind of similar to what I'm talking about on gold now. So you basically get a fake up move before, let's say, Nikkei makes its move. And if I was committed to trading Nikkei all the time, that's the time of day that I would be looking for setups. After that big increase in volume, shakeout, reversal, and then it goes. Anyways, I am going to run. I'm going to bounce. Thank you for being with me. Check out our Topstep Discord. We have over 100,000 members. We have all of our lovely coaches in there, so they are very, very happy to help. We can talk about setups. We can talk about a whole bunch of stuff. Obviously, if you want to do the VIP entries, you're going to have to do that during the main broadcast. So this is the Discord. JJ says, question, can I get your number? No. That's the end of that. All right, so enjoy the rest of the broadcast. Now, I need to check my schedule to see what's happening, but I think I'm probably going to be just on for the Thursday, as per usual, back to the futures, when we might try to find some RBOB or ES trades. Until then, I will be here tomorrow for another London session. And while we wait for Dax to come in, please keep upvoting this Eurex posts. Please keep upvoting it, because they just keep moving it and moving it and moving it. And that makes it, a little bit difficult here to talk about DAX when we don't have DAX. It's like, I trade DAX. You can't trade it on Topstep, sorry. So let's hope that at some point they move it forward, but yeah, we'll see. Anyways, again, very intelligent questions, amazing. You guys are awesome, guys and girls, obviously. Again, congratulations to Leah for passing her combine and getting funded, so we can get updates on how she's doing and try to help her as she navigates the first few days of the XFA. Thank you for being with me. I'm Deeyana Angelo, aka Market Stalker D, and this has been the London session on TopstepTV. Take care.